SDX Energy, the result of a merger between Sea Dragon Energy and privately owned Madison Petrogas late last year, is, as of today, Friday 20th of May, a London-listed stock, having previously been listed solely in Canada on the Venture Exchange. With assets in Egypt, where it has net production of 1,550 barrels of oil per day, it raised $11 million, or £7.6 million, through a placing. Paul Welch is the Chief Executive. He joins us now. Paul, welcome.
Thank you.
You were the man at the top of Sea Dragon Energy, of course, so you sort of stayed where you are, but SDX has been built up around this merger, and you come to London market today. Why AIM and why London?
Well, we're headquartered here, firstly, and secondly, we wanted to broaden our investor pool, and we think that the London market, the London Exchange, has a broader range of investors that we couldn't tap with solely being a TSX-listed stock. So we came here for the location and also for the investor potential.
You came here and you listed at 18 pence a share. You had this placement which got away really quite easily, I think, didn't it? Who's come on board with this?
Well, with the coming on board, we have a number of large institutions here, to name a few: JP Morgan, Citi Financial, a few like that, and also some local PCBs got involved. So we have a broad range of new institutions and new consumer starts as well. Yeah,
let's look a little bit more about the balance sheet and the amount of money this brings onto the balance sheet, where you are now with what you're going to be doing and the cash you've got behind you. Right. What are your plans?
Okay, so the reason we raised the money is kind of twofold. Firstly, we have a field called Maseda that we picked up as part of the merger.
This is in Egypt, isn't it?
This is in Egypt, yeah. Onshore in Egypt, and we recognized when we picked it up that it needed some work. So what we'd identified is the potential essentially doubled field production in that field from 4,000 barrels a day, actually up to 9,000, so slightly more than doubling it, through a combination of workovers and the implementation of a water flood. So that's where $5.5 million is going to go. And the other $3.5 million that we raised is going to go to our exploration opportunity up in the Nile Delta called South Tasuk. We're about 75% through acquiring the 3D there, and so the remainder is just to finish off the 3D.
So you're satisfied that you've got the money in the bank to do what you want to do, to increase the overall revenues ultimately in the company?
Right, so based on the investment program we have, and assuming that strip prices don't change, and they are headed up now, we will generate an additional $10 million per annum by the investment in Maseda. So we're pretty excited about that.
Okay, you mentioned the strip price. Let's take a look at the economics of this project and what you're earning per barrel out of the ground at the moment. What are your costs and what is it you're getting in off each barrel?
So we have two producing assets in onshore Egypt. One's called Northwest Kemsa. Our OPEX there is $6 a barrel, and the other one is Maseda, and our OPEX there is $10. So our margins are between $12 and $15 per barrel at current strip prices, and as prices increase, all that flows to the bottom line. So at the moment, at $40 Brent, we're making 15. At $50 Brent, we're making closer to 25. Okay,
and of course, you mentioned Egypt. Egypt is where your main flagship asset is. What are your relations like there with the Egyptian authorities? This always comes up, I know, as an issue when looking at North Africa, but that's where all the oil is, let's face it.
Right. I mean, our relationship with the authorities is fantastic. The issue some people see that when they talk about Egypt is getting paid, we're fully paid. Right? Security is not an issue. The thing we like about Egypt is that you have a lot of local service companies, so it keeps our OPEX low. So as the Egyptian pound depreciates against the dollar, our OPEX continues to drop. So for us, it's a great place, a good environment, and good fiscal terms.
Are you getting paid in local currency, or is it
getting paid
dollars?
In the combination of local currency and U.S. dollars? So last year, we got 2/3 U.S. dollars and 1/3 local currency. 90% of our expenses are in local currency, so we can survive quite happily on that mix.
Okay, let's take a look as well about what your plans are outside of where you are at the moment, and you've highlighted how you want to expand your assets at the moment. Are you looking to acquire?
Yes, we are. We're looking to acquire producing assets. We think it's a good market to go out and pick things up because we're one of the few companies that has cash and no debt, and so companies that have exposure to a lot of debt need to sell some assets, and so we're looking to pick up those type of opportunities, not only in Egypt but across the broader North Africa.
I was going to say, in fact, you're looking down your asset portfolio on the website, you also talk about Cameroon.
We have an asset in Cameroon. We made a gas discovery in Cameroon earlier in the year. I think that is kind of a secondary asset at this point. We're looking for a solution on the gas side there rather than oil, but I think our exploration opportunities and our development opportunities are going to come broadly from North Africa and not so much from Sub-Saharan Africa. So and when I say North Africa, I mean Egypt, Tunisia, and Morocco.
Okay, but the existing portfolio of work and what you've got planned, I think your net asset value is what, about $75 million?
Yeah.
How does that equate to the market?
That's not such a good story. At the moment, we're trading about $25 million market cap, and our net asset value is 75. That's just core. If you look at our RENAV, then we're up to just over 120. So we have a long way to go, and we think by listing on AIM, getting people excited about the story. We're going to close that gap.
That's the thing, isn't it? It's all about exposure. It's all about talking to people. It's all about getting the word out there. So you're protected potentially from a lower oil price. You're looking for obviously more money because oil prices are going up. What do you see as what keeps you awake at night? I think that's the big question here, because at the moment you've got this listing, you've got it away in London, you've got the money in the bank. What is it that concerns you about either where you are, what you're doing, who you're doing it with? Or I
think it's the next opportunity that concerns me, because I think our base business is solid. We've identified a great investment program for the future, for the near term. It's the next deal. What are we going to do next? How are we going to get to achieve our goals, which are to get to 20,000 barrels a day? That's what concerns me. And again, it's through this process of identifying assets, honing them down, looking for the one that best fits us, and then making the right offer for it.
And us is you and the old team at Sea Dragon, or have you got more people on board?
We have few more people on board. So primarily the management and technical team came from Sea Dragon, but we supplement that. So now we have some people from Apache, people from Perenco. We've broadened out the team here in London, also a little bit in Cairo as well. So it's a much broader based team than it was before.
Yeah. Final question, timeline for news. What should we watch out for?
I think that the next piece of news is probably going to be our exploration well in South Dusuk in December. We'll have a little bit of news about Cameroon because we're in the process of extending that concession. We'll know that about midsummer. But then the next big piece of news, outside of any kind of acquisition we do, would be the exploration well in South Dusuk, which is scheduled for December.
Okay, we'll look for hearing forward more about that. But thanks in the meantime, Paul, for coming in. That's Paul Welch. He is the Chief Executive of newly London-listed SDX Energy.